Vincenzo's Go Crypto Investing, this July the 29th, 2025, early afternoon altcoin update. And you members of Jabroni Killers, you're getting this about 6 hours coming out around just after the noontime hour today on the 29th. But it won't be out to the general public until 4 to 6 hours later, giving you guys the first mover and appreciation and advantage. And Jabroni Killer member, before I forget while I'm here, because I still have enough time, I got about 10 minutes for this video that I can do before my lunch is over. But there was a question about something from a member of Jabroni Killers, and I needed some clarification on it because I'm not quite sure what you're asking. View all. Get out of there. Thanks for the update. Artie Lopez, my favorite name. We're going to look at LCX in this video. ALGO has a weekly XRP Ripper. This was a great analysis. Vincenzo, thanks. But Ashley, I will put the SPX 6900 crypto. I didn't even know that was a thing. Where is this question at? Again, this is something else to where, right here, XRP Ripper. Vincenzo, my friend, can you show me again how I can get the trading zones? I'm doing something wrong when comparing my chart to yours. What trading zones? Are you talking about the VP volume indicator? And we're going to start this video with AMP. And this is how I come up with trading zones. And you might be looking for this one. I like to use the daily, depending on the coin. But I like that when you're using the trading zones, you actually need to get it wide open as long as you can. And if this is what you're talking about, I go into here, then I go into the fixed range volume profile. And this is the one that I use for the dailies and the weeklies. And then this is how I get my trading zones, right? Because it shows me where the volume is. Like up here would be one. Right here would be a trading zone, right? And then the volume, this would be the mean of the volume right here, down here. And then you got the mean right in the middle. That's one way that I look at it in the weekly, but that's what I use there. Let me know what you're actually talking about so we can be on the same page and I can try to help you in the quickest, easiest, simplest way that I can. But right now, you can see AMP is still consolidating within this trading zone. I'm hoping this is a long-term macro time frame bull flag, right, where you have upper resistance, lower support. And I'm hoping that's what we're in right here. I'm hoping that's what we're in right here. And if we are, the pattern breakout would eventually get you to the 2 cents to 5 cents. And our track does show that. And it does show now showing a bottom, then trading sideways and going into the end of the year, into the beginning of next year, actually shows 2026 as the year of AMP, right, is what we're going to name. 2026 is showing the year of the AMP because AMP it's showing a better than a 30x. That's a 10x. That's a 20x. It's showing a 30x return in AMP next year, the year of the AMP. To where if you bring your calculator out, if we actually did have the year of the AMP, say you had $4,000 in AMP and you held it the whole time and it went up 20 times itself, you'd be looking at $80,000 profit, right? $80,000 profit if you had the year of the AMP, right? So that's what we're watching. But in the short term, between now and then with the year of the AMP, you want to stay above the pattern support level, which is down there at 0.00316. And right now in the shorter term, you want to get back above the moving average. As you can see, the 50-day moving average, you're below. You want to get back up above the 50. You got rejected by the 200-day moving average in the daily. You want to rework on this consolidation. You want to use this as a bullish consolidation to rework and then shoot back up with some fortitude and some momentum. And then that's the way you can break that 200-day moving average and get on top of the 0.00481 and continue this bullish trend. Where if we look at it in the 4-hour with that double bottom right there, you hit bottom 1 in April, bottom 2 in July. Then you got a mid-ground rejection up there back in mid-May, right, going into June. And that's what we're looking to try to break to the upside. DGB is the same thing. You're trying to continue to move and continue to follow what your close counterpart XDC's been doing. And right now, a potential macro time frame cup and handle where you started to form it here in 2024. Then you had your cup in 2024 sell-off. Then your rounding bottom. Then you had your bullish pump at the end of 24 into 25, formed your neckline with the cup. Then in 25, you've had your down and sideways consolidation in a falling channel, which is the handle. And then if it breaks that, which you're attempting to do, your targeted move would be all the way up here at 0.9511, going from the bottom of the cup to the neckline to the point of a breakout. And that gets you right there. And that's what we're trying to do right now. We've broke back out of that channel or the handle resistance line. And now we're on top of the 3 moving averages trying to hold it and the 0.00839. And if you can do that and confirm a breakout, your next move to the upside would get you all the way up into here, right? That would be your next move to the bullish case. To the bearish case, if you fail to hold this support on any kind of retest, you're likely then liable to come down back into this area where you've been having support on a diagonal or horizontal support ever since March of this year, right? So that's what we're looking at in the DGB. If we look at the ALGO, let's get that ALGO on there. ALGO is still consolidating down. It's above the 3 major moving averages, so that's bullish. It's above the 24 cents or the bottom part of this red support and resistance box trading zone, right? So that's very important. We're above that, but we want to stay above that. And because if we fall below this 24 cents, this is a critical support level, because if we fall below this 24 cents, you're liable to breach these moving averages, and before you know it, you'd be at 19 cents. But if you can stay above this trading zone, you can make another run at 36 cents, because your next major resistance zone above that is 52 cents. But you would have to get back above 36 and hold the top side of this to move up. Conversely, if you keep consolidating, this is a bullish consolidation still, but you want to stay above this critical 24 cents and these 3 moving averages, because if you don't, you're going to be sitting down here before you know it at about 19 cents, and we're going to continue to watch that. The XCN's the same thing, but at a different price level, and in this case, it's a purple box, and you want to stay above that 0.01498 and the 200-day that's just below it to stay short-term bullish. Right now, you're just below the 50 and 100-day moving averages, slightly bearish because of that. You want to stay above those, because if you fall below the 0.014 and the 200-day moving average in the daily, you'll come all the way back down to a pattern low of 0.00810, right? But if you can hold support, you can try to make a run at the 0.02279. XDC is the same thing. You can see this is what DGB is trying to follow. It came up to major resistance at 10 cents. It's consolidating, and now it's trying to make another run up at it, and it's either going to make a run at it and break it, and it's going to make a move to the next level, which is 12 cents, or it's going to get rejected, and before you know it, it's going to end up back into the underneath moving averages that are fastly uptrending. So if it took a day or two, these moving averages would be much higher. But if it can't break this yet, it'll start to trade sideways and slightly down into the moving averages underneath it. But as long as you're above those 3 moving averages, you're still bullish. It's not until you get below those 3 moving averages you would turn bearish again in the XDC. The HBAR has had a phenomenal pump too off of that double bottom. And that's what we're thinking, like the AMP double bottom's got to do. It got rejected just below the 34 cents, which is a major resistance level from that mountain double top here back in December and January, how we diagnosed it down to 15 cents. And that targeted move got hit twice, but it ended up being the ultimate support in the short term to make a 100% pump from there. But now we're getting rejected, and this is similar to the last couple of coins. If it gets the bullish consolidation, keeps it above these 3 moving averages that are uptrending, you reload and try to break this 34 cents, right? And then if you could break that 34 cents, the next move to the upside is nearing and breaking all-time highs and potentially going into price discovery, right? But on the downside, your major support levels are the 15.5 cents. That would keep you from going catastrophic bearish to 8 cents. But if you get below these moving averages, you would come back down to that 15 cents. So you're looking to stay above the moving averages to keep this current momentum intact. LCX, we're going to round it out with, because then I got to get back in the work. LCX has got rejected multiple times by the 14 cent level. And if you can't get the buyers to come back in soon and get back on top of these descending moving averages that has just been too much to overpower it, you're going to end out back at the 0.0926, which is your major support level, because if you broke that, you would go to the bottom level of this red support and resistance zone. But to get bullish, you got to form what we got in green there. You got to get over the 50. You got to get back over the 100. And more specifically, you got to get over and confirm on top of the 14-cent level. And that would flip the momentum and flip the pattern and flip the movement of the price. Like the channel, subscribe. Peace and love. The Rock's Eyebrow, Jay.